we will get started. Self-employment tax. So we already did some of this when we covered chapter 6. Remember, self-employment tax is the amount that the self-employed individual is going to pay, which consists of both halves of Social Security and Medicare tax. So individuals who are self-employed pay those, of course. Like I said, we did most of this. The form, you remember the form 1099 NEC, non-employee compensation. Now, not all self-employment income is reported on a 1099 NEC, right? Because if you happen to own your own business and you are dealing directly with customers and they're paying you, like not other businesses, but dealing with customers, those customers aren't going to give you a 1099. So, but oftentimes contractors will receive a 1099 NEC from companies that are utilizing the services of an independent contractor. They are not required to issue that 1099 NEC to contractors until the total for the year reaches $600. Now that does not mean that any amounts received under $600 are not taxable income. The worker, the self-employed individual, is still required to report any income that they received, even if it wasn't reported on a 1099. But for the payer, they do not have a requirement to file a 1099 NEC until that total reaches $600. Again, per individual, per year. So if I have a company and I am hiring I am utilizing the services of 10 different independent contractors. I pay 5 of them $500 each. I pay the other 5 $1,000 each. I do not have to issue 1099 NECs to those that I paid $500 each to, but I do have to issue 1099 NECs to those that I paid $1,000 each to, okay? Those individuals who received the $500 payments from me are still required to report that income on their Schedule C. It's just that I don't have to issue them a 1099 NEC. There is nothing stopping companies though from going ahead and issuing them if it's under $600. They can do that, and in fact a lot of companies will do that because it's just easier for a lot of them to issue them to everybody that they contract with, right? Rather than to only pick out the ones that they paid more than $600 during the year. It used to be, and I think I mentioned this before, so this non-employee compensation used to be reported on the 1099 miscellaneous reporting form, but that miscellaneous form included all sorts of different types of income. Rent income, royalty income, other miscellaneous types of income, and so it was reported together with income that wasn't subject to self-employment tax, which was kind of confusing, right? So they separated out the income that is subject to self-employment taxes, and now it has its own reporting form, which is this 1099 NEC. So if income is on that NEC, it is subject to self-employment tax, okay? Let's see, so the 1099, what are the due dates here for these? So those 1099 NECs have to be filed by January 31st. They have to be in the hands of the recipient by January 31st. 1099 miscellaneous forms are actually due February 28th. March 31st if they're filed electronically. So some different deadlines for filing those, depending upon the type of income. And this makes sense because, especially that NEC, it's going to be it's earned income. So those individuals are going to will want to start working on their taxes and everything, and so that those reports have to be in their hands by the end of January. Okay, so again, 12.4% is the total rate for Social Security. we've got the employer, employee, got the social security, sorry that's so squeaky, and the Medicare, 6.2%, 6.2%, like this pen. 1.45.
Sorry, not to cut you off, I was just trying the tax act real quick.
It's not working.
It's still not working?
Stop.
I just did like a fake one.
Are you still getting the,
Yeah, the update.
can you screenshot the update and like send me, can you send like email it to me so that I can forward it to them?
Okay.
So I can do the same thing, because it's like,
Yeah. So, following. Yeah, it'll be the same update as hers, so. So it's when you try to print,
yeah.
so when you try to print to PDF, it won't do it.
Well, if you try to save to PDF.
When you try to save to
No,
PDF, it won't do
yeah,
it.
I'm trying to print.
I mean, anything that involves exporting it, it won't let you export it.
It won't
without
let you
updating
export
the
it.
1040.
Okay. Alright. They told me it was updated.
That's not good.
And have you, so try it on this, for those of you that,
Okay.
like, can you try it, because
Maybe
I don't know
that's
how it works. I thought that these were like connected to my lab as well, like, and that's where they got the program from, but
I'm gonna try it on here, but the thing, like, when I log in on my lab, it looks just like when I log in here. So I would assume it's the same system, but Access works on my laptop and it doesn't work here, so.
okay. Well, try it on these. Anybody, try it on these to see if these are updated, because then that would mean that probably they only updated these. All right, so employer-employee portion, so again, Social Security 12.4% up to, these markers last for about half a day. They're done. Somebody's making money off of these, because I tell you what. So up to, hey, this one's good. And this is, again, this is just for 2022. That changes every year. And this is up to infinity. And then again, we've got the additional Medicare tax, which is only the employee, nothing for the employer, 0.9%. And this is amount over. So when you're the employer, it's over 200,000, that's when you start applying this. When you are self-employed, it depends on filing status, right? So those married filing jointly, this is amounts over 250. This is AGI, I should say. When you're, yeah. Single, head of household, qualifying widower, 200,000, and married filing separately, over 125,000. But again, employers will use that 200,000 as their cutoff. Okay. Now, employers, remember we've got that 1/2 of self-employment tax that is allowed as a 4 AGI deduction. Remember that was from chapter 4, where we talked about those 4 AGI deductions that go on Schedule 1. We get to, once we've calculated our self-employment tax on the Schedule SE, then we take 1/2 of that and we get that as a deduction that helps to reduce our adjusted gross income. Let's see, what else we want to say about this? Right, and so, and I can't recall if we did this in chapter 6, I think we did. Remember, we're going to reduce, before we calculate our self-employment taxes, we're going to reduce our self-employment income by 7.65%. And then we're gonna use that to calculate our self-employment taxes. So, for example, if we have, let's say we have gross self-employment income of $150,000, and then we've got deductible expenses of $50,000. So our net self-employment income is $100,000. Our income tax is going to be based on that $100,000, but our self-employment tax, we're gonna get to take a 7.6% deduction on that amount. So less 7.65%. So minus 7650, which gets us to 92,350. This is the amount then that we apply our self-employment tax to. Okay, so don't forget to do that, subtract that 7.65% from whatever our net self-employment income is. Okay, again, income tax is gonna be based on the 100,000, but self-employment tax is gonna be based on the 92,350. Okay, and then after that, once we've calculated the self-employment tax, then we get to take half of that as a further deduction against AGI. Does that make sense? And all of that is done on the Form SE. If you recall working with that in Chapter 6. That 147 maximum applies to all earned income per individual per year. So if the individual has self-employment income as well as wages, it's all of that earned income combined is applied to that 147 base is applied to all of that income combined. But it's per individual, per year. So if you got a married couple and one individual makes $100,000 of wages, the other individual has 2 jobs. They've got a self-employment income of $100,000 and then they've got wages of $100,000. The spouse that is making the $200,000, that 147 limit is gonna apply to them. But the spouse that's making $100,000, they're gonna have all of that is gonna be taxable. So it's per individual, per year. Does that make sense? Questions about that? Okay. They talked about that here. So here's an example of that. Do they have a narrative here? Not really. So earnings from Schedule C, profit, net earnings, 48,500. We're gonna subtract 7.65% from that. In this case, they just multiplied it by 92.35%. So 44,790 is the amount that is subject to self-employment taxes. But they also have W-2 wages of 104,000, right? So we would take the 147,000 minus the W-2 wages that they have earned, the amount that's already been subject to Social Security and Medicare tax. The remaining amount of earnings for this individual that could be subject to Social Security tax is 43,000. Well, they've got 44,790 in earnings, so that means not all of that 44,790 is going to be subject to Social Security tax. All of it is going to be subject to Medicare tax, though, right? Because there is no cap on the Medicare tax, and they've got the calculation here for these two amounts. So 43,000. So this is what they would pay on their tax return, and this would be in addition to any amounts that were withheld on their W-2. Questions about that? Here's our Schedule SE, if you recall. So there's that, where is it here? I mentioned the 400. the minister's question. Church ministers have special rules, so that's why there's that listed there. Okay, so net profit or loss, so line 2, net profit or loss from Schedule C. Line 31 is gonna go here. And then this is where we're gonna multiply that by the 92.35%. And they mention here, so if line 3 is more than 0, multiply it by 92.35%. Otherwise, enter the amount from line 3. If 4A is less than 400, oh, that's CRP payments, sorry, I saw the 400. Part B is for the other 400. Combine lines 4A and 4B. If it's less than 400, stop. You don't owe any self-employment tax. Still owe income tax on it, but you don't owe any self-employment tax. Now, the real bummer is that if it's $401, you owe self-employment tax on all 401. You don't get to break on the first 400. Let's see, what else do I want to say here? So here's the total amount that's subject to self-employment tax, and then this is where that calculation is done on the Social Security wage base, that 147. You guys have already done this. You did this in chapter 6, so you should be pretty familiar with the Schedule SE. Remember, so the calculation for the tax is done here, sorry. And then taking 1/2 of that, that's the amount then that is going to be a deduction on the Schedule 1, or an adjustment on the Schedule 1 that's gonna reduce our adjusted gross income. Questions? All right, unemployment tax. So if you recall from payroll accounting, we also have unemployment tax. Now, they throw this in here for preparing the taxes themselves, the income taxes. We really wouldn't be dealing with FUTA taxes unless we have a household employee. So for any employees that are for any individuals that are just self-employed but they're not household employees, there's no household employee involved, we wouldn't really be worrying about the federal unemployment tax. That is going to be the responsibility of employers. So employees never have to worry about that amount. But if we have a household employee, we may have to pay unemployment tax on their behalf. So we're going to talk a little bit about, do some refreshers on the FUTA taxes. So remember, FUTA tax this is the federal unemployment tax, and it works in conjunction with state unemployment taxes. FUTA taxes administer, the revenues from FUTA taxes administer the unemployment program, whereas the revenues from SUTA taxes actually pay the benefits out to unemployed individuals. So again, household workers, so employers who pay employees who are not farm workers or household workers would be subject to the FUTA tax. Again, these are employers, not including household employees. If they paid wages of $1,500 or more in any calendar quarter in the current or preceding calendar year, if they had 1 or more employees for at least some part of a day in any 20 or more different weeks in 2021 or 2020, or more, what does that say? Or more different weeks in 2022, or more. That says the same thing to me. These two things say the same thing to me. I'm not sure why they're separated out. Some part of day in 20 or more different weeks in 2021, or 20 or more different weeks in 2022. Okay, I guess in one of those years. In the current year or the preceding year. Tax rate is 6%. Yeah, go ahead.
I just have a question on that. So it says that they have to pay it. So like if they paid $1,500 or more in the previous year, but what if they don't have that like household employee anymore? Would they still have to like pay anything, or is that just if they're
That's
still
just if they're
employing
paying.
somebody?
And this is $1,500 or more in any calendar quarter in the current or preceding calendar year. So, no, if they didn't pay any wages, then they don't owe anything.
But if they
Right.
do, even if it was only like $100 in wages, they would still pay it.
If they meet this
That-
criteria as
okay.
well.
Okay.
Yes, yeah. So that tax rate it's only on the first $7,000 of income. So any amounts over 7,000, just like that, Social Security has a wage base of 147, FUTA has a wage base of 7,000. It's 6%. However, if you recall, there is a credit reduction, there is a credit of 5.4%. So, and there are a couple of criteria in order for employers to receive that full credit. The credit can be reduced, so that 5.4% can be lower than that. So for example, our FUTA tax is 6%. If we have a credit, it's a credit against the tax rate in this case. It's a little confusing because we normally think a credit against the tax. We're talking about a credit against the tax rate in this case. So the full credit is 5.4%, which means we would, what the heck is that? We would reduce this down to 0.6%. This amount though, this is the maximum amount of the credit. It could be an amount lower than that. So if we have a reduction in our credit, and there are a couple of circumstances under which employers may have a reduced credit. One of them is if they're in a state that overall has a credit reduction because they've borrowed from the federal government to help fund their unemployment program. So that means all the employers in the state have to help make up that amount. Or if they're an employer that has been late on their state unemployment taxes. So if either of those apply, this credit could be reduced. So if that credit is reduced, so let's see, here's our full credit. Let's do it this way. If we have a credit reduction, we're actually going to add to the percentage rate. So if our credit is reduced by 1%, we would actually be adding that then to calculate what our rate is. It's a little backwards. It's confusing when you think about it. So instead of it being 0.6%, it would be 1.6%. So our credit has been reduced by that 1%. This means we're gonna pay more tax, right? So if we have $1,000 of income, we'll just use that as an example. If we have the full credit reduction, it's 0.6. So what is that? $6 is our tax. If it's 1.6%, it's $16. Yeah.
There was a problem over this in like the SmartBook stuff that
Uh-huh.
like I was kind of confused on. If I give you the information, could we go
Yeah,
over it?
let's see if we can work through it.
So it said ABC company has state wages of 160,000 subject to the FUTA and SUTA.
Okay?
ABC did not make timely deposits to its state fund. How much for the FUTA tax will it pay?
Okay, so does it give you, that's all they're giving you?
Yeah.
Okay, so they say here, to receive the maximum credit, employer's state agency must make the state's contributions on or before the due date for filing the return. If the employer is late, the credit is limited to 10% of the amount of deposit that would have been allowed as a credit. So we would have to reduce our credit by 10%. Here's an example, I think here, of how this would work. So we could kind of apply this to that problem
Okay.
as well. Now they've got 3 different employees listed here, but Boersma Company, 3 employees paid the following, oh, maybe not. This is not a credit reduction. There we go. So Everett Company had state wages of $100,000 subject to SUTA, did not make timely deposits, therefore the credit for FUTA is limited to 90% of 5,400. So the credit amount, so what we would do is take the wages times the credit amount. I brought a calculator today. I stole it from my son. So 160,000 times 0.054. So the full credit would be 8640. Full credit. But we only get 90% of that credit. So point times 90%. So 7776 is our credit. So we would calculate the $160,000 of wages times the 6%. Right, so 160 times 6%, this is our full FUTA. $9,600. And then we get a credit of this amount, 70. So 1824. Is that?
Okay, so even if they pay late, they still get 90% of the credit,
Yeah.
so,
Yeah. But the more they do that, the less, then the more that credit is reduced every year.
okay. So when like reducing the credit, I didn't really see any problems that had like where we like add a percent, like you have on the left side there.
Yeah, I
Will
did,
we
I,
only do like reducing it for this class with like, if it's late, reducing it? to
yeah, do
10?
it the way that the book has it.
Okay.
Yeah, do the calculation of the credit as at the full 6%, and then subtract what the credit reduction is, and then that limit, yeah.
Okay.
Does that make sense?
Yeah.
Okay. Yeah, this, I was just kind of trying to give an illustration of the change in the percentage.
Okay, so
Like
we
what
would need to
conception?
know like what percent they're actually paying, as long as we can get the like, the credit amount and subtract that from the
Yeah.
full credit?
Okay. Does that?
Yeah.
All right. All right, so household workers are a little bit different. These are people like nannies and housekeepers. Think Alice on the Brady Bunch. You ever watch the Brady Bunch? I used to, every day I would come home after school and I would watch the Brady Bunch. Typical Gen X, latchkey kid. So, Alice was a full-time live-in maid, housekeeper, nanny, which I never really understood because the mom didn't really have a job, but I guess he had 6 kids.
She's got 6 kids.
I suppose. It's not something that I would necessarily refuse, I suppose. Okay, so household workers are subject to FUTA tax only if they pay cash wages of 1,000 or more. And don't think of cash as in, cash. Think of, cash check. They receive, it's wages, okay? I don't know why they say cash wages necessarily. If they paid 1,000 or more in any calendar quarter in 2021 or 2022, they must also pay FUTA tax for farm workers if they paid cash wages of 20,000 or more during any calendar quarter, 2021 or 2022. Or if they had 10 or more farm workers during at least some part of the day during 20 or more different weeks. That's for farm workers. So we got some different rules for household employees and we got some different rules for farm workers, right? So they are deposited on a quarterly basis. Now the FUTA taxes, household employers still have to file a Form 940 when they're, and I guess we probably talk about the 940 down here. have an example of it somewhere. So they still have to file that Form 940. The same requirements for filing it for household employees applies for regular employers as well. So you only have to deposit it though once the FUTA tax reaches at least $500. So if you, during the year, I'm kind of saying this wrong, it's due by January 31st of the following year unless you have a liability of over $500 during the year. So once it reaches that $500 point, the IRS wants to start getting their money on a quarterly basis. Again, same thing holds. The more you owe them, the faster they want their money, right? But that Form 940 is only filed on a annual basis, unlike the Form 941, which the Form 941 for employers is what's used when they're reporting their Social Security and Medicare tax.
So even if they don't make a lot of money, they still want quarterly deposits?
Only once it gets to $500. Once the amount that's owed exceeds $500. And if you've got the full credit, what's 500 divided by the full credit? 500 divided by 0.006. Your wages would have to start exceeding $83,333, and that's for multiple employees of taxable wages. Remember, so if we're talking about a household employee, once they reach $7,000 of earnings, they're no longer subject, FUTA tax doesn't apply. So that for a household employee, chances are you're never going to reach that 500. You can just file that at the end of the year, and you pay it actually for the household employees, even though you file that 940. Actually, before I speak, I can't remember if this is. I think the FUTA taxes are paid with the individual tax return of the employer, of the household. So so I'm your housekeeper and you have to file a tax return every year, your Form 1040, you report all of those taxes on that 1040 and pay it then on my behalf. You still owe it, but it's kind of a different schedule because as a household employee. We already know this. So also local fraternity or sorority chapter. So if and they have like house moms, do they have house dads? They have house moms.
Not of a sorority.
Yeah. So those would be considered household employees as well, and then the sorority would have to pay these taxes on behalf of them. So if you're a household worker, you're subject to the same rules, but the cutoffs are a little bit different. So if they paid any one household employee wages of $2,400 or more in 2022, then they have to pay Social Security and Medicare tax. Also federal income tax. If federal income taxes were withheld from employees, then they've got to pay it. Household wages of at least $1,000 were paid to all household workers combined in any calendar quarter during these 2 years, then they have to pay FUTA tax. So they don't have to, so if somebody is, so this applies to the whole year up here. This applies to calendar quarter. This applies to one household employee. This applies to all household employees. So a little bit different requirements for FUTA taxes as opposed to Social Security and Medicare taxes. Household workers do not include the taxpayer's spouse, father, or mother, children under the age of 21, or anyone under age 18, unless providing household services is their primary occupation. So it would exclude like high schoolers who are nannies for the summer, that sort of thing, right? Or babysitters during the year. They could be considered employees, or they could be considered independent contractors. But again, if they're independent contractors, it's all based on facts and circumstances of who has control, right? And if they provide those services to more than one household. If they provide it to more than one household, then there's a greater chance that they're an independent contractor. Otherwise, they're probably an employee. And instead of filing the 941s and the 940, like I had mentioned, those individuals who employ household workers will report those taxes on Schedule H, which is part of the Form 1040. Okay? Do they have an H here? No. They've got the Form 940. Maybe they do. So, you guys probably remember this form from payroll tax. This is the 940 that's filed on an annual basis. You indicate what state you are reporting in. If it's more than one state, then you have to file the Schedule A as part of the Form 940. Total payments, that would include all payments to employees. So not just limited to the 7,000, but everything. Payments exempt from FUTA tax, that would be things like amounts that the employees paid for health insurance, so pre-tax deductions, 401k, retirement plan contributions, that sort of thing. That would be pulled out of that, and then there's a box for indicating what type of exempt payment you're including there. And then these are payments that were made in excess of 7,000 to each employee. Okay, so for example, let's say we've got 3 employees, employee A, B, and C. Employee A made 12,000, B made 27,000, and C made 30,000. They all contributed to a 401k at 10, let's say it's 10%. So 1,200, 2,700, and 3,000. Total wages, line 3, here, so 9, 5, 69,000 is our total wages. Payments exempt from FUTA tax would be the total. This would be line 4 here, so 12, what do we have here? So 6,900, right? And then total of payments made to each employee in excess of 7,000. Then we have to take our 12,000 minus 7,000, 27,000 minus 7,000, 30,000 minus 7,000. So 5,000, 20,000, 23,000. This is in excess of 7,000. So 58, no, 48. So that would be on line 5. All right, so if we're looking at this, we would take the 69,000 minus the 6,900, right, minus 48,000. So, because we're going to add these payments together, and then we're going to add these payments together. So, so 14,100. Is that right?
Yeah.
So these were the, oh, I'm sorry, 48,000, yeah, minus that. So 14, that doesn't seem right. What did I do wrong? Total payments made to each employee in excess of $7,000. 5,000, 20,000, 23,000, because that should be 21,000. What did I do wrong? I did something wrong. 69, $4,900. Where's my 100? Alright, well, I don't know what I did wrong here. Cause those would be, let's see, 69. It should be 21,000. I don't know what I did wrong. But, so 7,000, for each of these employees. Oh, that's, so 5,000. I don't know, what did I do wrong?
No, okay, it's okay. 487 is correct. The difference is supposed to be 401k, because maybe here they don't have 401k.
Well, it should be that if we've got, cause all of them were over 7,000, so the taxable amount here should be, it should be 21,000
How many people?
times 0.006. I don't know, I'm not gonna spend more time thinking about it, but. Do you guys have, you have a 940 to do
Yeah.
in your return, right?
Yeah.
So 68,000 for the total wages. Payments that were exempt from food tax, 6,900. Total of payments made to each employee in excess of 7,000. Oh, I think this has to not include that. So the 48, I adjust it for the, because we've already, otherwise we're doubling up, right? So 48,000. Anyway,
So
I'll work on it.
the total, could you just add up all the wages and then subtract 7,000 for each employee?
You could, but you gotta also take into account payments exempt from food tax. So like, if you had somebody who had made $7,000 and then they contributed $2,000 toward a 401k, that actually brings their taxable food wages down to $5,000. I'm sorry. If they made what did I say? 7,000, yes, 5,000 for taxable, their taxable wages. Does that make sense? I think I'm doubling up here, but I don't wanna spend too much time on it, cause I wanna be able to, we'll come back to it if we've got time, okay? So any, credit reduction would be calculated here, but you'd also have to use Schedule A, which I think they give us here, and then the tax that's due. If the total amount that's due is over 500, then Part 5 has to be filled out. But if it's not over 500 for the year, you do not have to fill this part out. And then signatures. So here's the Schedule H. Do you guys have a Schedule H to do on your tax returns? No? Schedule H is part of the 1040. This is where household employment taxes are calculated. So, just questions to determine whether you have to file the form. Total cash wages that are subject to Social Security tax, and of course there are instructions that go along with this to determine how much would be subject to Social Security tax. To a Social Security tax times 12.4% here, $595. Total cash wages subject to Medicare tax times 2.9%. Additional Medicare tax withholding. Now remember, you would have withheld, as the employer, you would have withheld half of this because they're an employee. They're responsible for paying the other half, right? Total Social Security, Medicare, and federal income taxes. So if there was an amount of federal income taxes withheld, let's see, where's the federal income taxes? Oh, right here, line 7. In this case, it's just Social Security and Medicare taxes. So 734 So this is the amount then that would be paid in addition to any other taxes that are due. So in addition to income taxes when you filed your Form 1040, in addition to any self-employment taxes when the 1040 was filed, that 734 would also be due. And do they give us the, and then here's the FUTA tax, where the FUTA tax is calculated. Okay. And then this amount, and where does this go? 734. This goes on schedule, I think it's schedule 3. Yeah, so which is that schedule for other taxes, and then it gets added to the additional taxes. So here's an example. We've got Dale and Carrie Cohen as a household worker for the entire year. They paid the household worker $400 a month, $4,800 for the year. So assume they live in New Mexico, in this case. They have a state reporting, here's their state reporting number. They have paid $480 of state unemployment taxes. They paid cash wages of $4,800 for the year. So their total taxes, and this is just the form that was filled out there. Okay. True. Effective tax rate for FUTA, which one of those? Assuming that they pay into their state SUTA programs on time. The answer is 0.6%, because they would get the full credit. You can use Schedule H, individuals who employ household employees. And then if they